What's going on, everyone? Happy Monday. Hope you guys all stayed safe out there in the market. So yesterday started off a big aggressive gap down in the futures market. We were down almost 200 points on the NASDAQ. I already knew that once we were coming into the pre-market that we were going to see an overall gap down on the markets. One thing that I wanted to see the bulls do was hold the 50-day moving average, which they did. However, today's candlestick does not look too reassuring. It looks like we want to go lower. Again, we still have to give the bulls the benefit of the doubt. They did put up a little bit of fight. One thing that I do kind of want to point out to all day traders and scalpers, right now is not the time where you want to be going max size. Especially, you need to get better at identifying when days like today are going to be a little bit more choppy, where we're in the middle of a tight range and things are starting to get a little bit more consolidation heavy. And what I mean by that is, if you can look at this red line here, which is a 50-day moving average, if you look at this orange line here, which is the 100-day simple moving average here, you can see that we are getting very, very tight price action in between this range. Now, we do have a very clear line in the sand of around $303.25. I would like to emphasize this right now. Anything below $303.25 is a short position. Whether you are going to trade the triple Qs to the downside buying put options, you could just take the 303.25 short, or if you want to play something like, something like Tesla, right? So if we go and look at Tesla, if the triple Qs do decide to lose that 303.25, we can take Tesla through today's lows, which is also sitting at this Bollinger Band here. That price is going to be around $280.54. That will have an initial push down to 278. So just keep that in mind. You got about $2 worth of room. If you look at something like Meta, this chart on the daily looks absolutely fantastic. If you can see this previous day's low here from August the 24th, that low was sitting at around a price of just about $159.69. We kind of took that area out today, and we do have more room down to go below today's lows, all the way down to around 156. So definitely want to keep that in mind as you are looking at charts that you are looking to want to play for this week. Now, if we get back over to what is going on with the triple Qs, one thing that I do want to point out is that, if I could just pull up the triple Qs chart, that would be helpful. If we're looking at the triple Qs here from a daily time frame, if we do start to build below $303, we do have a macro flush point down to 293. This can be very, very aggressive, or this can take 2, 3, 4 days to get down here. One thing that I do kind of want to point out is that if we stay below the 50-day moving average, and currently right now that's sitting at 304.41, is going to be a sit and hold, meaning as soon as we take out the 303 level and we close below, you would just continue to sit in your short position until we close back above the 50-day moving average, and that would tell you that you need to get out. Now, if we are going to have the bulls sort of wake up, we are going to need to hold this 50-day moving average and today's lows, and we are going to want to start making a push back up to the top of this range. Just understand it's going to be a little bit choppy. We do have overhead supply at around 308. Anything over 308, I would be considered going long. 308 has room to the 5-day moving average, which is right now sitting at around $312. I did want to take a quick look at Apple, as Apple did gap down and is currently resting on the 200-day moving average. Now you can see at one point in time today, Apple did come down and test its 50 EMA. So for us, what we would be looking at on Apple is anything below 159.75 is a short position, trying to clean up that short position right around 158.60. Again, this is going to be a very small trade here. Just understand your risk before you enter into this trade. Now, if you are looking to sort of play this back up to the top side, saying that Apple is going to hold its 200-day moving average, you can do one of two things. You can let it take out today's close at 161.45, and you would have room all the way back up to around 162.84. That's around $1 worth of room. Just understand that it could be choppy in this area. Now, the gap that we do have to fill is between 162.88 and around 163.64. That's also another trade that you can take there. Just keep in mind that our 5-day moving average is sloping down. It is going to cross below the 20-day moving average, and that price right now is sitting at 165.96. That is going to be our macro level of supply. So just kind of rounding things off here, we are going to keep this extremely, extremely simple for this week. Anything below today's lows and underneath the 50-day moving average is a short position. You do not have to trade the triple Qs, but you could trade one of the stocks associated in the triple Qs, all you're going to need to do is pull up their daily chart. You're going to need to look at that daily chart. You're going to need to look at today's lows, and then you're going to need to find the next area of support. And then once you find that next area of support, that's going to let you know how much potential room that you have. I hope that video makes sense. If you guys like this type of content, make sure to join my Discord. Also, like, comment, and subscribe to my YouTube channel, and I will catch you guys on the next video.